I just really love trading. Like I'm a fan of trading. A lot of people are lazy. They don't want to put in the hard work. They want the silver platter handed to them. Journaling everything that you're learning as you're going. So you can come back to your journal, read through what you did wrong. A lot of new traders are getting absolutely diced right here. They're even getting diced right here. Invest in a good journal. Know why you're taking trades, why your trades are losing. Know your stats.
If you could like say sort of one actionable change that someone could make this week, what would that be?
For new traders that are going to be watching this video is you need to...
Welcome back to Process Over Profits today, everyone. Today I'm joined by PJ Trades, an NQ futures day trader with over 10 years experience in the markets. PJ, how are you today, man?
I'm doing well, man. How are you doing today?
Absolutely excellent. I'm really excited to sit down with you today and see, obviously, someone who's been trading a decade, see what kind of gems you can drop for us today.
Absolutely, man. I'm excited to be here, and TradeZella has just been such a great brand and really has helped, my trading career. So excited to chat and see what we can dive into today.
So first things first, for the people that obviously don't know you, let's talk about how you actually got into trading. I'm sure it's a bit of a throwback now. It's been a while. Like, what actually got you into this whole business?
So I think at a very young age, I think I was always just very interested in the markets, right? The stock market, the bull on Wall Street, just all that stuff really kind of was like always would kind of speak to me in a way. So throughout the years, as I went through school and stuff, I had a lot of business classes. I learned a lot about, just different things on Wall Street and stocks and stuff. And that kind of sparked my interest. And in about 2016, I got started trading in the forex industry, trading currencies, trading London, getting used to that market. And then from there, that really kind of like exploded, my trading career. I went from forex, went into options a little bit, went to trade gold, silver, crypto, stocks, and then I found a home in futures right around 2019, 2020 when COVID hit. Had a lot of free time, dived into futures, learned ICT, and that's what I've been trading ever since full time. So
what made you like land on futures out of everything? What I'm seeing this as be like a very much more popular trend recently, where a lot of traders have started in forex and now they're transitioning to futures, or like they're getting out of options and going into futures. Why futures for you?
So for me, it was the regulation. In the forex industry, it's literally the Wild West. There's so much just manipulation, fraud, stuff like that. So I wanted to get into a more regulated market, and that's where I found a home in futures. And obviously, no spreads, low fees. That was just right up my alley. And then what really kind of really sold it for me was the delivery. I mean, the way that the NASDAQ moves, I absolutely love it. It really fits my style of trading. And, we've been trading it ever since.
Awesome. And would you say, obviously you said about that time where obviously in COVID you kind of dived into it. Was that like, how many years did it take you to get to a point where you were like, okay, I can actually I can trade, I can start doing this?
It's a good question. It took me, so I've been trading about 10 years now, and it took me about 4 years to hit like that break-even point. And during those 4 years, I know a lot of traders that are going to be watching this video could probably really just relate to this. There was plenty of times where I wanted to give up and I didn't think this was going to work. And, trading really tests your mental and it tests your psychology a lot. So it took me around 4 years just to break even. So during those 4 years, I wasn't making any money. I got to break even in my fourth year. And then from there, it was kind of just like a snowball effect after that point.
Obviously, you wanted to quit all these different times. What was the thing that really kept you going, like after all those blown accounts and sort of, the shit days that come?
I just really wanted to make it work, man. I was really just like, I think that I have a work ethic where it's like I get involved in something and I get really passionate about it. And I really wanted to make trading work. I love the freedom. I love the charts. I love reading the charts. I love breaking down the charts, the journaling process. Like I kind of fell in love with that process. And, through just really focusing on that internal process, I was able to start making profits. And I just really love trading. Like I'm a fan of trading. I watch a lot of the podcasts of the guys that do different interviews and stuff. So, it was just always like kind of a love-hate relationship always, but
I think it always is.
it always is. And I just wanted to make it work, man. I just really wanted kind of also prove people wrong. People that say that trading's a scam, that you can't make money trading, you can't do that for a living. I really wanted to prove those critics wrong in my personal life, and here we are. So
You mentioned that word process there, right? Which is
yeah.
kind of what we're all kind of here to sort of dive into today. What is like your typical trading process? Do you have things that you do to kind of help you stay level-headed, mentor the market, or like do you have a process to like improve, backtest, journal, that kind of thing?
Yeah, so I mean, I'll start from the beginning of my career. I had zero process.
Okay, this is gonna be good. Yeah.
Yeah, zero process. And I always tell people now that with the amount of information on the internet between YouTube, between the discords, the live, trading, mentorship, stuff like that, there is absolutely no reason that you can't start to learn how to trade and become profitable. But back then, we didn't have that stuff. It wasn't, there wasn't a wealth of knowledge that there is now on the internet. So I had zero process back then. I just threw money at the market, got my butt killed in the markets, and that's not the way you should do it. You should 100% focus on the education and the strategy first. You need to have, basically, you need to mimic what somebody's already doing and then kind of fine tune it for your trading style and your personality. Everybody's different. Everybody trades different sessions. So the first part of the process for new traders that are going to be watching this video is you need to find a model that's proven to work, and you need to literally become an expert at that one model. Don't have 10 models, don't have 10 strategies, one model, focus on one time zone, one kill zone, and take it from there. So, my processes now obviously are very well oiled. Like that's the entire reason that I'm able to pull money out of the markets now is the process is has been fine-tuned for 10 years. Like this didn't happen overnight. Like 4 years of those 10 were an absolute, we were losing money and barely breaking even on that fourth year. So now, just like a little bit, kind of like a little like snippet of what it looks like now is I've got four models that I trade. I don't recommend people trade four models, but I trade four of them because I'm an expert at four of those models. And, you know, the process is the same every single day. It's very robotic. It's boring. Trading is not something that's an exciting thing to do. If you're feeling too much excitement, you're likely gambling a little bit. So really methodical in our approach. We're waiting for XYZ to happen and then we're reacting from there. So process driven trading. And when people start focusing on the process, the internal part of trading, that's when they'll start to make money. But the problem is most people focus on the P&L, and that P&L and the light at the end of the tunnel syndrome. And I'm going to get this new car, I'm going to get this house. That's when people start getting into trouble because they think it's a get rich quick scheme, and it's not.
For people that obviously do struggle with obviously getting this process, how does someone start to develop such a systematic approach like yourself?
Hard work, man. You got to be almost like addicted to becoming better. You got to want it. You got to get on the charts, put in the hours. Backtest is a big part of what I did for a long time. I took a whole year of the strategy that I was learning and was basically backtesting on paper. I was paper trading it, making sure it worked, learning the different ways on how the market moved and when it was, when this model would present the most or when it would work the best. And just really refining that process over and over and over again. So when I say this, like once you have the strategy, it doesn't just stop there. You have to learn how to read that strategy in real time. And that's going to come from practice on the charts, back testing, and then forward testing. And what I mean by forward testing is live actual price. Like you need to be engaged with price to understand how it moves.
Yeah.
So that is, that's just work. That's hard work. And then from there, it's like journaling everything that you're learning as you're going. So you can come back to your journal, read through what you did wrong, what you did right, and then make corrections from there. So that's kind of the process of how I built that.
I think a lot of people are confused that when we say this word journaling and they're like, well, what do I even do? Like what is journaling to a point? What kind of things should people be asking themselves in their journal to actually improve and make progress? Like what should they be documenting?
They should be documenting one, their trade setups. Like that's the number one thing you need to be documenting because you need to know why the trade worked and why the trade didn't work. And with my approach, when we're documenting trades, we are literally like we have the trade marked up on the chart, we're screenshotting it, and next to it somewhere we're putting why we took the trade. Like for example, my strategy, we're looking for some kind of sweep of liquidity, we're looking for some kind of V-shaped recovery from that zone. We're looking for an opposite draw on liquidity to take a trade into. Like, do we have all these checklists first? And kind of breaking it down step by step as to why we're entering. So for me, that journaling process is very important because this is pattern recognition trading the way I do it. Like
Yeah.
this is price action trading. So these patterns happen over and over and over and over again. So while you're screenshotting it, this is muscle memory for a lot of people. You're screenshotting it, you're reviewing it, you're looking at it. And the more that you look at something, the more you'll be able to identify it happening in real time. So that's why journaling is important. But on top of that, you also want to track your stats, right? You want to know, am I not trading good on a Monday? Do I not trade good on Thursdays? Does the model not work well right at the opening bell? Like a lot of people do not have these data points. And without that data, you're kind of really trading blind.
Yeah, 100%. I completely agree. I know obviously you said that you trade ICT concepts, right?
Yes.
So I think when people talk about ICT concepts, they can kind of get a little bit overwhelmed with how much there is. Do you like take parts of ICT concepts and then have you used those to like build a model, or do you use like all of it entirely?
It's a really good question. I have taken bits and pieces of the 2022 mentorship and kind of morphed it into an easier style, really. Okay, so I'm just going to break down like this is one of the trade setups that we took on July 17th. And what I want to talk about this one is because it really has so many different confluences that make it a super high probability trade. The way that I'm trading is I am looking for the market to sweep some kind of liquidity point. So in this example here, we have a bunch of relative equal lows that get put in down here.
Yeah.
And the market pulls. I'm kind of going to bring this all together so we can just work through it together. The market pulls into these relative equal lows. Okay. And it sweeps all this liquidity down here. Okay. At the same time, the market puts an SMT. For people that are watching and they're just getting used to like these terminologies, SMT stands for smart money technique or smart money tool. It's when one of the indices sweeps a liquidity point and the other indice fails to sweep it. So for example, NQ is sweeping these external lows here. Okay. And then if we look at ES, it's not anywhere near those lows. Like these open lows are still here. So this is where you get the SMT formation, right? This right here is not a 1000% confluence. You can't just trade an SMT blind, but it's adding another layer of confluence into how we trade. Okay. So we're sweeping liquidity. Okay. We're putting in that SMT and now we're recovering, very nice. We have a V-shaped recovery, I call it. So let me just delete this. Now, if we're looking at this, let's kind of zoom in so you guys can see this together. This is there's a 1 minute fair value gap in here. Okay. And for people that are just not understanding fair value gaps, they're inefficiencies in the market. So right here, this is a sell side imbalance, buy side inefficiency, fair value gap. Okay. And what we're looking for in my style of trading is we're looking for the market to V-shape, form this on the sell side of the curve, and then we're looking for a flip of that gap for inverse to the upside, targeting all of this liquidity. So this would be a TP1, this would be a TP2, so on. So like we're targeting London high in this example. Okay.
Yeah.
So on this specific day, this was a 30-second inverted fair value gap. I don't think it's going to let me go back to it for some reason, but there was a 30-second gap in here, also combination in a 1 minute fair value gap. So how this trade looks, if we bring it back, okay, and I don't know why it's not letting me run this on a 30-second for some reason.
It's trading view. It's limited data. That's why we've got TradeZella backtesting. Get around
There
this.
you go. Perfect commercial right there. So then this trade it looked like this because on the 30 it closed a little bit different. On the 1 minute it's overextended here and I can't bring it back. So the trade was looking like this. TP1 would be here and then TP2 would be up at this London high. So as you can see here, we're going from an external draw on liquidity down here. We're sweeping all this up and then we're going towards the London high in this trade. And it's as simple as identifying that this manipulation leg here has a fair value gap in it. And once the market closes above it, That's where we're executing a position, targeting the opposite draw on liquidity, and the trade ends up running to, a full TP. So I love trading this style. This is like more of a reversal style that, on this day, you get a lot of confluence. You get the SMT, you get the V shape, you get the inverse, and you have clean targets. There's a couple other models that I do trade, but right here, this is one of my favorite models to trade.
Awesome. And is SMT, is that like a must-have confluence for you when using this
No,
model?
no, good question. No, it's never a must-have. It's an optional confluence. I think a lot of traders that will end up seeing this video rely way too heavily on SMTs. I see it all the time in my group as well. Like people are just trying to trade any SMT. Like you can't just trade any SMT because there's going to be a lot of false SMTs. You really want to see something like this where you're sweeping all of this relative equal lows here, which we know are orders resting in the market. So when we're sweeping all that up, then we're getting an SMT and ES is not anywhere near its lows down here. That's a good sign that the market's ready to make a reversal to the upside. So no, it's an optional confluence.
I'm curious with this like model. So I think a lot of what goes into ICT currently is what people think is like kind of daily bias.
Oof.
So I'm curious
Yeah.
to get your take on that.
Yeah, no, I'm a big advocate. I post this on social media all the time. I am not a big fan of daily biases. I think that it's very detrimental to traders to come into the trading day saying, "Hey, I'm 100% bullish" or something, and the market that day ends up telling you that the market's showing you bearish, but your pride can't get out of the way because you're bullish on your daily bias. For me, it's reactionary trading. When I moved from having a daily bias to being reactionary towards price, that's when things started to explode. So I do not want anybody to get married to daily biases. I think it's okay to have, a lean on the market for the day, but don't get married to it because the market might show you something else. You need to be able to react to it. So, yeah, reactionary trading is what I teach all my traders.
Obviously, you said about, like liquidity sweeps and that kind of thing. Like it's very easy for people to get caught up and see kind of every low as a liquidity sweep. What kind of validates a good liquidity sweep versus a bad liquidity sweep?
That's a really good question. Let me see if we can find another example in here for some like clean liquidity sweep. So what I like to see though is a candle closure above a zone that actually classifies as a liquidity sweep. Let's see, we have something down into, we probably have this that we can look at. So there is a lot of times where the market's going to, sweep, with a wick, for example. It's like you see this wick right here. This is actually a great example. You see how this is all like wicking to the highs, and people might look at this and be like, hey, we just swept this external high here, and now I'm looking for a short. But in
Got you.
reality, this is not a clean sweep for me. I'm not looking for just a tiny little wick. I'm actually looking for candle closures above the wicks and then looking for the structure to show me a V-shaped property towards the opposite direction. So as you can see here, this is not the real sweep. Okay. Then we get an actual sweep with candle closures above all this junk here, cleaning all that up. That's when we get, I believe this is a 30-second inverse to the downside. And now this is literally one of my favorite trade setups. When I have a clean sweep like this, right? We have a clean sweep. Now I have a 30-second inverse. Let me just bring this back here. Okay. The market puts in the change in the state of delivery here, right? But at the
Yeah.
same time, we're building up all this liquidity. I don't know if you guys can see this. I want to kind of zoom in on this. This is what I call LRLR, not that. This right here. This is all LRLR, these little wicks that are building up. It's like channel liquidity. And whenever it's doing that, okay, it gives me areas to draw into. Okay, it gives me draws on liquidity. So in this example, we get that actual manipulation above all of this junk with candle closures above. Then we get the V shape. Then we get the 30-second inverse here. And now how we traded this in my community was we waited for this market to come back into the inverse, okay, and then target all of this junk here. So as you can see, this market um, does that. We're in on this retest here, okay? And then what we get is, this is why I love taking LRLR trades, because once I get to the bottom of the LRLR,
Hmm.
right here, this trade becomes risk-free. So
Right.
right,
Okay.
this gives me that gives me that out to get out of this trade risk-free here. I could scale something out, and now I can take this down into the next draw on liquidity, which I believe we were targeting this fair value gap down here. This fair, oh yeah, I remember this day. This fair value gap was holding price up the entire day, and I just wanted to take it back down into here. So this was a nice 45-point trade just off, that clean inverse.
Yeah, great trade. With inverses, how do you know when to trade or retrace and kind of when to just get in? Like, what's your rules for that?
It's a really good question. Again, that is all determined by the trader. There's no right or wrong way to do it, but a lot of it comes down to feel and the way the candle's closing and the speed that we're seeing in the market on the inverse. Because there's going to be days like this one where this does not close that aggressively below the inverse. And I'm looking for this to kind of tap back in and go. Then there's going to be days where this inverse rips all the way down here and I can't even take the trade because now the RR is chalked. So it's discretionary. It's at the hand of the trader how they want to trade it. There's no right or wrong way to take it. Like you could take it like this and you're in on the break, or you can wait for the market to come back up to the inverse and then trade it that way. So it's really up to the trader at that point. There's no right or wrong way, really.
And what's like the situation like with your stop loss placement and how you kind of manage that? Is it like, are you always going above the inverse like you have done there, or are you going above the highs?
So yeah, I like to if that's also another situational thing. Stop losses are all situational depending on the trade setup. For this example, I probably would run stops above this last final 30-second inverse here. Because if we get back up into this zone and flip this, we're just wrong. So running like a 17-point stop is good, or above the swing high for a 20-point stop is still good. Keeping us right about a 1 to 2 RR trade. That's usually my target. Like 1 to 2 RR is where I want to be setting my trades up for. So this is still appropriate to take a stop above the swing high here.
That's awesome. And you mentioned that you have like other models, but would you say this is like your go-to like the main model that you trade?
Right now, with the way the market's been moving, we've seen a lot more of these inverse trades that are popping up. Summer month trading obviously is very difficult. There's just a limited amount of opportunities within a session. So like if we're looking for like an A plus trade, there's not a lot of them. If we're being honest, in an AM session, you might get one or two, three max, which is rare. So I've been seeing this model pop up more than my other models. So, we're kind of looking for this one the most. And I would say this is my favorite model to trade.
It's rare that I get to speak to someone who has actually been around in the markets long enough to obviously gone through obviously Trump's current presidency and obviously his previous one, and those kind of that kind of volatility in the situations that happen in the market, like when oil went to like zero, for example. Do you remember that one?
Oh yeah. Oh, I remember. I wish I literally had my finger on the button to buy, and I don't know why I didn't buy it, but yeah, I remember it.
Yeah, some
I was
crazy times
watching it
back
happen
then.
in real time.
But sort of, so obviously you knew that Trump was coming back into the market this year, and the markets were going to be a little bit crazier, etc. With your sort of years of knowledge and experience, is there any adjustments that you've made this year due to that, or like around like as you say, like summer months trading? Like, do you make certain adjustments throughout the year that obviously affect your trading at different times or different economic situations? Do you have any sort of filters when it comes to that?
100%. Yeah, 100%. I truly believe that any trader needs to see at least a full two market cycles to understand what every season's going to bring. So there's 100% a filter. Summer trading is going to be a lot worse than quarter 4 trading from October to like January-ish. So yeah, everybody needs to see two full market cycles to know when to put the brakes on and when to, step on the gas. So any good trader is going to be able to come back to you and tell you like, hey, like we know summer months are notoriously slower and we're not looking to, you know, trade every single day. We're looking for only A plus opportunities if we get them. So every single season is going to bring different types of trading. But as far as the presidencies go, the first Trump presidency is a lot different than this presidency. We're dealing with a massive tariff war. We're dealing with a lot of policy changes. This has been obviously a completely different market that you need to adjust to in real time. In May of this year, I think May was one of the worst price action months I've ever seen since I've been trading. It was some of the
Yeah,
worst.
it was gross.
It was gross. So, um, yeah, man, you got to be able to react on the fly to even to the presidencies, to the economic data. I preach, people need to know the economic data. They need to know when it's coming out. They know how to trade around it. Don't want to get caught in any of that stuff. But yeah, this all goes back to being a reactionary trader. You got to kind of see these cycles through and understand how you're going to have to adapt to that new market condition.
In that case, then, do you believe that mechanical trading doesn't work and you can only sort of do discretionary trading?
What do you mean mechanical exactly? Like,
So, in terms of like, you take discretion out of it, you have your fixed model, and when that pattern presents, you just like you could almost algorithmically code it to a point where it's so systematic and so just like this one pattern and that happens, and you don't put any discretion into it, so you don't have any filters. You just take every
okay,
trade.
yeah. No, I always, yeah. No, I truly believe that you need to have discretion built into your trading. There's so many variables that will affect your pattern. Like, for example, today, like I'll just give you real life example because this happened today. This market today is, where are we at here? So we open up, right? And we are just chop city. I call it search and destroy price action. We're getting SMT at the high. We're getting SMT down here. We're getting SMT down here. A lot of new traders are getting absolutely diced right here. They're even getting
Yeah,
diced right here. Okay. So there was an opportunity to trade here today. There was an opportunity. There was a inverted fair value gap opportunity here. We looked at it. I said, I don't want to touch it. And the reason was because there's a couple factors missing today. We have no news. We have no liquidity in the market. The market's likely waiting on NVIDIA earnings coming out this week. We don't have news until Thursday. I just don't like this delivery. So, yes, there's a pattern here today, but we're missing factors that are going to drive us in this trade to actually it move swiftly. I hate getting into a trade where I'm sitting like this. Like, how long did this even take? Like, this is like
I think that's like 40 minutes.
yeah, well, this is like 25 minutes of chop. So if you would have entered into this flip here, you're in 25 minutes of chop, and then it just like delivers slowly, comes back down, and then the real, actually, it wasn't even a real move today. Oh yeah, this happened here later today. This was literally at like 2 o'clock in the afternoon, but this is outside my kill zone, so I wasn't even looking at price here. I'm cut off at right around like here. This is when I stopped trading for the day, right around noon. So this just doesn't look good. Like we're just missing some factors here. And just because your pattern presents doesn't mean you need to execute it. Like, do we have a draw on liquidity? Is the volume slow? Are we in a summer month? So all those filters always play a big factor in how I trade.
And I'm curious, obviously, you said about the summer months and the winter months, and obviously there's optimal months, bad months, right? Do you
Mhm.
like adjust your risk to try like because obviously a big part of the journey is like kind of scaling in your trading, right? So you start making
Yeah.
your first 10K month, then you get to 100, and it just kind of it goes exponentially from there. What kind of like tips would you have for someone who wanted to scale? Would you say like to a certain times of the month to like increase your risk and try to put the step on, or like do you have any kind of
I
plans
think
or strategy with that?
Yeah, I think the thing that I do is I try to get ahead in the beginning of the month on my point sheet. So like I'm looking to get ahead in like that first 2 weeks basically, and then kind of like slow it down into the end of the month to play more defensive. As far as like scaling, I pretty much use like the same sizing. Well, it depends on what account I'm running that day, but sizing usually stays around the same unless I'm building a higher buffer into those accounts. Maybe I'll add more, but um yeah, it's my goal is to try to get up early in the month and then try to play more defense later in the month because I just feel like I have a better success rate right in the middle of each month. Like I feel like that's where I get really good trade opportunities. And then
Yeah.
the end of the month to me is just slower. Like it's just like for example, this month has been end of month has been really slow. Look at this. Like we're just chopping. Not really
And do
doing too
you
much here.
do you again, obviously, I know you put so much emphasis, as you said, on the economic calendar and like, oh, how that affects your trading. Do you think that's because we have like the CPI, NFP, PPI, all that at the start of the month, and then
Yeah,
it kind of
yeah.
dies down after?
Yeah, like if we look at this, you're gonna see basically I like to call this the script. Like this is the script for the market, and everyone needs to understand the script. If you don't understand the script, then you're kind of just you're not getting it yet. But this right here, this calendar, for people that are watching, it's forexfactory.com. This should be your compass for your entire trading month. You should know that the end of this month is going to be pretty light trading. Like we have nothing on the board today besides a bunch of medium impact news, which is nothing. Tomorrow we have nothing. Then we get some like prelim GDP, which is not that big of a driver. Then we get core PCE, which again is not that big of a driver. But then if you look at the beginning of the month, this is where things really start to open up. You get non-farm payroll on that Friday. Then you get core PPI and then CPI, which is obviously one of the biggest news drivers the entire month. And
Yeah.
then this is like really where I think like attack mode comes in because there's look at this, look how much data comes in beginning of the middle of the month.
Yeah.
So
Volatility is great.
yeah, like this is where like this is our lifeblood as a trader. Like you need the market, you need the fundamentals to move the market. And again, we're not trading during these news events. We're trading after the news events. Let them come out, let the market give direction, then we're looking for trade setup. So always use this as your compass when you're trading, guys.
Awesome. Thank you so much for that. Is there any sort of tips that obviously you being an ICT trader that you could give to someone who is overwhelmed and is new starting ICT, like any sort of tips to kind of help them on their journey?
Yeah, man. Honestly, the biggest tip I can give you guys is if you're going through the 2022 mentorship, you should really try to simplify the trading as much as you can because there could be a lot of extra noise that when you're learning, you're like, well, what's good and what's not good. My tip is one of like the best things that you can learn right off the bat in ICT is draws on liquidity. I think that's one of the things that I've taken and I've used in my own trading style is if you can get your draws on liquidity correct, you're going to be able to make money. A lot of times people get so confused and obsessed with the daily biases in trading and they're not getting it right when what you really need to be doing is just waiting for these zones to get swept, waiting for reaction out of those zones, and then taking trade models from there. So draws on liquidity, super important for me. I use the overnight highs and lows. Like I use Asia high, London high, New York AM high, New York PM high. A lot of times I also use like open fair value gaps. I don't know if we can find any draws here on today's. Yeah, like for example, this market right now is delivering out of this 4 hour gap. Let me delete this. And now it's targeting another buy side draw up here on the NASDAQ. So these are draws on liquidity. So having these on your charts are going to give you guidance. And then having your fair value gaps drawn out is going to give you guidance. Just knowing that this is a massive 4 hour gap and we've basically held consequent encroachment of this gap for like since Monday, that should be giving you guys some guidance right here, knowing that this market has not flipped to the downside. So we still have bullish order flow being respected, targeting up into this buy side liquidity here. So fair value gaps, huge for me. And draws on liquidity was another thing that really kind of, changed my trading and turned me to be a profitable trader.
Awesome. Thank you so much for that. So now obviously we've covered the strategy, we've covered like how you trade. Now the other obviously major side of trading is obviously the psychology, right?
Yeah,
How
psychology.
how important do you think psychology is versus strategy?
Psychology is very important. Very important because you could be a wizard on the charts. You could be the best technical analyst in the world, but if you don't have any control of your mind, you're never going to be able to be successful because you're going to constantly do things that professional traders don't do. You're going to be FOMOing into a trade. You're going to be revenge trading. It's you versus you in this business. Like that's why trading is so hard. And humans are emotional beings and they cannot control their emotions. So psychology is huge. I think it's like 80% of trading, really 90%,
Yeah.
because you can totally ruin an account. You will ruin that account. It won't be the market. It'll be you ruining the account because you want a revenge trade. You want to get back into a trade. You want to, you can't take a losing day. And that's one thing that people need to understand is this business, you're going to lose. Nobody has a 100% strike rate. It's impossible. People will be billionaires like all the
Yeah.
time. So you're going to lose. It's part of trading. Become the best loser wins. Like that book is great. You guys should read The Best Loser Wins. Check that book out. But um, get used to losing. Get used to it. I always tell people losing is just giving you feedback. It's just giving you feedback. And that feedback you need to use as a tool and a catalyst, right, for your next trade. Why did that trade fail? Or why did that trade win? And you need to know that, you need to know those data points. So the psychological part of trading, I think, is where many people get it twisted. They get it mixed up. They think that they're just going to always they're going to win some money. And then they're like, I'm going to win some more money because I made 500. Now I can try to make 1,000, but we all know how that goes, bro. You're
Yeah,
not, you're,
100%.
you're, that you're never gonna, it's never going to be the next ladder. You're going to end up blowing your account up to that. So, um, emotional control is massive in this business, and it's really a reflection of the person behind the screen. If you are notoriously just a really sloppy human being, or you have no discipline, you have no structure in your life, it's going to come out on the charts one way or the other.
Yeah, I completely agree. Do you have any sort of non-chart habits that help, obviously build up discipline outside of training, and then it helps with your training, like things like the gym, meditation, anything that you need to do before you trade, like anything like that? Do you
Yeah.
have anything like that that helps you?
Yeah. The one thing that I've done for years, I've been an athlete my entire life. It's the gym. The gym's an outlet, a stress reliever for me. I go to the gym as much as I possibly can to just get a sweat in, just kind of get away from the charts and, reset the mental. So gym's a big part of it. Um, having also for me personally, a relationship with God is a big thing. I think, having that guidance in my career and that peace at mind has been just a huge step in my trading. And then it's having like the right support system around you, having people that believe in you as a trader, and not people that are constantly going like this, like, hey, no, you're not going to be able to do that. That's not going to work. So having like that belief system, I think, is really powerful. But for me, man, it's just routine at this point. It's just routine. It's gym 6 days a week, waking up at the same time, eating the same foods, just being disciplined and being a robot, honestly. Like you have to be robot in this business, because as soon as you start bringing your emotions into trading, you're going to end up losing money.
When you were in that second, third, fourth year, and like revenge trading was like a prime sort of thing, and you
Oh,
did keep like blowing accounts, in that moment, did you have something? So for someone who's in that kind of phase right now where they're just blowing accounts and they just can't seem to get a lid on revenge trading, it just seems to
mhm.
like keep creeping back. Was there any sort of exercises or things that you did, like say for example, limit yourself to only place one trade a day, or you can only trade anything like that that you could sort of give to someone watching to help them sort of get over this problem that they have?
The thing that I've been teaching people is you need to operate your trading like a business, right? It's not a video game on the screen where you're just clicking buttons and there's dollar signs and stuff. This is a legitimate billion trillion dollar business, and you need to treat it as such. So for people that are having trouble with just like trying to fight the market, revenge trading, FOMO trading, this is the thing that I tell them. Pretend like you're managing $1 million worth of capital, but it's not your money, and you have to answer to 10 board members that day as to why you took a trade. And I bet 95% of people that watch this that take way too many trades wouldn't be able to go back to a group of board members and explain to them why they took 15, 20, 30 trades, right? They're just going to
Yeah.
be like, I have no reason why. I have no idea why I did that, right? So you have to operate on a different wavelength with trading. And this is your business. Everything that you do is directly correlated to your bottom line, and you need to treat it like that. So I always think in the back of my head, hey, if I'm taking this trade today, can I go up to 10 board members managing millions of dollars of money and be able to explain to them confidently why I took this trade?
Yeah.
And it's a good game to play in your head. And it creates a sense of like, this needs to be a really, like, it gives you a sense that I need to take high quality trade setups and not be stupid. I have a lot of people that come into my Discord, and this is one thing I think maybe people will be able to relate to, is they might have a good paying job on the side. Like maybe someone's making six figures on the side, and they're like, I just can't like trade because I'm already making good money on the side. And I always tell them this, like, pretend like you did, like this was your boss at your six-figure paying job. What would your boss say to you if you were trading like that, or you were treating your job like that? You probably get fired, right? So I like to make that real life representation that like you need to compare it to something like that where you're answering to someone basically, and then it really will kind of change the way you think about the next time you get into a trade that you know you shouldn't be taking. So I think it's a good demonstration for people to really start to implement if they're struggling with that.
Yeah, it's a really good analogy. And I think it also, like, if you do treat trading like a business, that's also why journaling is so important, because then you can go and back up. And it's like, if you did have a boss, here's my documentation for my work kind of thing.
Yeah, because if you don't have that documentation, you look like an idiot. It's like they're looking at like your sheet. You're like, you took 25 trades today and lost like 20 grand. Like, what are you doing? You have
Yeah,
no
go,
reason why.
yeah,
You don't know. So, um,
yeah. One of the things I like to say to people is like, if to help with overtraining is when you journal, like you have to like force yourself to journal every trade. And if you're that guy that overtraded and took 54 trades, like good luck trying to journal 54 trades in a day. That is like a grind.
exactly. No, you don't want to be doing that. And that's a great point. Like you want to be journaling like 1 to 2 trades. Like imagine 54 trades being inputted into your journal. Like what do you even write about 54 trades?
I
Like
know,
you
yeah,
just
brutal.
know you were being a degen. Like
A hundred
you know
percent.
you were.
If you could like say sort of one actionable change that someone could make this week after watching this video to help their trading, what would that be?
Journaling. I mean, I think the subject is you have to journal. You have to know your data points. It's something that I skipped doing for 4 years, basically. Like I didn't want to do it. And what happens with journaling is you're documenting your journey at this point. You're documenting what's going on. You're keeping yourself accountable, right?
Yeah,
So you need to journal to see what's going wrong and what's going right. If you're just showing up to the charts at 9:30, you're placing trades, and then you're just leaving and you're dipping and you're going about your life, you have no idea why you're even taking the trades in the first place. You're all over the place. So the thing that a lot of people, they're just I have to be real with you guys. I've always been real. A lot of people are lazy. They don't want to put in the hard work. They want the silver platter handed to them. They think that this is going to be a get rich quick scheme. It's not. You got to do the boring stuff, and the
yeah.
boring stuff will lead to results. But that's the one thing that I would give to a new trader that's like just starting out. Invest in a good journal and know why you're taking trades, why your trades are losing, know your stats. It's just going to help you get to the point of being a profitable trader. So just do it, guys. Just do it.
Thank you so much for coming on the show today, PJ. It's been an absolute
Thank you,
pleasure.
brother.
I hope you guys obviously enjoyed this episode. PJ, where can they find you on social media?
PJ Trades pretty much on all social media. I'm on Instagram, PJ Trades NQ. I'm on TikTok, PJ Trades, YouTube, PJ Trades NQ. We have a great, huge, thriving Discord if you guys want to hop in there with 12,000 members. So we'd love to have you guys in there.
Perfect. Amazing. Thank you so much for coming on, man. Have a good one.
Thanks. Thanks, brother.